So fellas, it came out like this morning, I think. It's Monday. Then Anthropic's looking at $150 billion valuation. MGX, which is a sovereign wealth fund out of Middle East, is looking to lead the round. It's at least that's what I can gather from what I'm seeing. But like 2 weeks back, they were floating $100 billion valuation. Okay, the last round that they did was in March of this year at 61.5 billion post money. So this is 143% increase in like 4 months. That's pretty good. Okay. So the 4 billion ARR is where they're at right now. So this is a 37x revenue multiple. Their revenue's up 4x from January. Yeah, that's not a mistake. 4x from January. That's $3 billion of incremental ARR in just 6 months' time. So, fellas, what do you think about Anthropic? Maybe Clint, we'll start with you, man. Like, how do you think these guys stack up with like OpenAI, xAI? Like, what do you think of this valuation? Like, give me your thoughts.
I mean, the valuations on these things, all of them are just absurd at the end of the day. But the valuations on public market stocks are absurd when you've got, I saw a report, I think it was from Goldman last week, that said that in terms of percentile speculation on companies with enterprise value versus sales of greater than 10x is in the 98th percentile. So look, this is just the nature of the world we live in. Money isn't real. NVIDIA is worth more than the material sector, industrial sector, close to the whole value of the financial sector. Like, you're talking about the Ricky Bobby economy, which is you're either first or last. And in AI, if you've got AI on the name, people are going to throw money at it. So these valuations have gone crazy. As far as Anthropic, I don't see how they beat out the other players in the space. There's more room for one, but I kind of want to bet on the winners there. And so I think there's other places to go. We talk about this all the time in terms of investing in AI. I'm not a big fan in investing in these large language model systems or platforms. I prefer infrastructure where the money's flowing than to, bet on the players that are having to spend the most money. So it's going to be really interesting to see kind of how they fare, but the product's great. I just don't see how they, I don't see how this valuation can be justified, even though they 4x sales, right? In a short order. Can they maintain that type of growth? When you're talking about 37 times sales as a valuation, you have to make that bet. You're betting on persistence of that insane growth rate, and I just don't think that's a realistic expectation.
Right. Okay. So to Clint's point, Nick, to Clint's point on the infrastructure component, like xAI and OpenAI have both gone out and bought their own like GPUs, right? That's like a thing. They're building their own data centers to run their models off of. Anthropic hasn't done that. They like cut deals with some of the larger cloud providers. Like, is that also too? Anthropic's had a lot of dilution, right? Like that $61 billion round that they did, there was a lot of dilution that was that flowed through from some of the convertible notes that they had. So what do you think about the kind of deviation of business strategy, right? And does that impact, you think, the valuation in the long run? Or like, what are your thoughts on how these things are kind of shaking out, these large language models and the paths that they're taking going forward?
Sure. I think Anthropic is doing a pretty good job of maintaining some semblance of independence and getting to, pick how they're paying for what they're paying for in terms of compute, and not having to be completely aligned, despite, some of the aspects with Amazon or things like that. It's not the same as the situation as OpenAI plus Microsoft. And then, that growth rate of 4x is pretty wild. So obviously they're doing something right, not being restrained by any partner beyond, excessive dilution and having to raise a whole lot of money. But if you compound out 4x growth over such a short period of time, you can get to that 37x multiple. So that's where my head's at.
Right.
And it sounds like, they're chasing the money, and the Middle East is a good place for it. We were talking about the players before. Who are the players out there? It's like Cristiano Ronaldo getting picked up by the Saudi Pro League at $250 million a year.
Right.
That's just how this is happening. When there's a lot of money, folks can take these big bets. And I think at the 25x come 37x, it's actually not terribly nuts. So
Okay.
I'm gonna be pretty supportive here because everybody's really concerned about how the next generation of search might look as well. When you're
Right.
looking at, could Google be disruptive? Yes. And might it be one player or could it be several? I think in this case, it still could be several. Anthropic, Perplexity, OpenAI, because when people are using these, they're doing slightly more research than trying to navigate to a website. So yeah,
Right.
I think this is pretty cool as a bet. And then I do feel as though they are a better position than someone like an OpenAI, and it justifies that
Right.
multiple.
Okay. Right. Okay. So Evan, you're my like resident product guy here, right? What do you think about like ultimately I think what both Clint and Nick just said is like if the revenue growth persists, then this maybe makes sense, right? But that's like potentially a very challenging thing to do. Like, how do you think of Anthropic's product, like, and how it stacks up to what's happening with like OpenAI and xAI? Do you think these guys are going to be able to continue this type of revenue growth? Do you think they got a product that can do that, or a product team that can continue to innovate and deliver kind of interesting products that continue to drive that revenue growth?
I do. I think Anthropic has a world-class product. I've said it on this pod before. I'm a pretty big user of all of the models, but Claude tends to be the one that I lean to for a lot of important tasks. Also, Claude Code has like totally taken over the developer world by storm. Windsurf and Cursor were all the big stories for the first half of the year, and now everybody you hear is just like, well, just Claude Code. Like at the end of the day,
Yeah.
and Claude's model underneath it was ultimately the thing powering those shifts, anyways. So you're seeing them go after verticals pretty effectively. They just launched their Claude for financial services. They're going after different, like they're going to do legal next. I think they have an excellent product, and I do believe that they can execute, and they are executing. I also think we're really early on in a big paradigm shift market, and so I think there's a massive greenfield for them to grow into. 37x seems expensive, but not unbelievable in my opinion.
Right.
I think that there's a lot of opportunity there. I guess the challenge is I think that if you look at the daily active users and market share compared to OpenAI, it doesn't feel like they're 50% less. If OpenAI is trading at 300, they have way less than 50% of the users of OpenAI.
Yeah.
So they have a lot to grow. And the question is like, well, was OpenAI overvalued? Is Anthropic overvalued? Which one is right or wrong? I think there's a lot to be determined there. But I think that from a product perspective, it's an excellent product. And I don't plan to stop using it. And I could easily see myself paying more.
Yeah. I mean, it's a good point. Like they're like identifying specific use cases and like good developing solutions for that and going after it. Like Bloomberg terminal. Okay. Like that thing hasn't been updated forever. Right. I mean, that thing looks the same as it does today as it did like 20 years ago when I first saw it. Maybe there's like additional functionality, right? But the interface is the same, and it's like it's a big ramp. There's a big learning curve to really know how to use that thing properly. So, I mean, having that could be very interesting to see, kind of a new competitor, like a real competitor in that space.
Right. And the announcement on July 15th, Claude for Financial Services announced the partnerships with Databricks, FactSet, Morningstar, PitchBook, and S&P Global.
Yeah.
There's your shots fired across the bow for a Bloomberg or anyone else. Not that there's a good comparison there.
That's just really interesting. Like as a salesperson, as an old school salesperson, to have like a widget that you can then go and say like, hey, let's go and identify everybody that owns a Bloomberg terminal and put this in front of them and see if we can take some seats or market share. Like that's like very interesting to me, right? So yeah, it's look, 150 billion is a lot. I think I'm with all you guys. Like I think I just want to see where the revenue growth comes from. I'm a believer, like Evan said. I think they can do it, and Nick said that too. Like I'm a believer. I think they can do it, but they got to put I think we're at a point now with all of these companies where they got to put points on the board.
What are the moat? What's the moat in these businesses, right? That's what I just have such a struggle with. It seems like you've got first mover advantage, right? And it's just about getting as big and as fast as possible in user growth. But what's the sustainable moat?
Yeah.
That's my big challenge.
I think it's a great question. But as someone who uses all of the models, and I'm actively using Gemini, OpenAI, Claude, and Grok probably on a daily basis, and Perplexity, I continue to move and use Claude for the most, in my opinion, my most important tasks. And so if the moat is just the best quality product and the thing that matters the most, I think it's like, well, can they defend that? It's going to be challenging, but they're doing a great job of it so far.
Yeah, quality can be a moat, right? I was mainly speaking on the whole industry in general. It just, it's a challenging environment to get my head around from a valuation perspective without sustainable long-term moats, because as we saw with the DeepSeek, just how quick disruption can rise from the ashes and shake things up a little bit. And now you're hearing, I think you guys talked about this on the last podcast, but now you're seeing financial institutions start to cuff the data a little bit, right? I think you're going to see that more and more. We've always talked about on this podcast that the war is going to be over data and data access and usage. So I don't know. It's just such an interesting, it's the greatest time to be alive, be able to witness these things, but it's going to be interesting to see how that unfolds without a sustainable moat.
I would say this though. I would answer this though, Clint. Like, I think access to GPUs seems to be something that you could probably build a moat around. And that seems to be like a huge area of focus, obviously, for people. Access to electricity is something like the infrastructure component, right? I think is a big one. The talent thing's nuts. I mean, these Meta's hiring people, paying them $1 billion over 5 years. It's like, it's wild, right? To your point though, like a bunch of fellows from China, rip out DeepSeek and like surprise everybody. You know what I mean? So like, I guess there's always potential for that, but one could argue if you're paying these big dollar amounts, that these people must be wildly talented, right?
The investment is real. We're seeing the investment is massive.
Yeah. The one thing I am interested in is like Google hasn't let it rip yet. They really haven't, right? And I'm just like, this personalized context thing really like hit me this summer at their last developer conference, right? That they did. Like, if they wanted to flip the switch and just go all in, like, I have all your data. Do you say yes to letting Gemini have access to everything? Right. And then what that looks like, or if they started standing up solutions around that, like they could catapult themselves very quickly into like, a top 3
I would
position.
sign up. I use agent mode on OpenAI, and it's fantastic, man.
Yeah.
Just the other thing, just going back to the moat for a second, people used to say the same thing about cloud. They're like, oh, well, Azure, Google Cloud, AWS, like, what's the moat? And what we learned from that, business, which I feel like is parallel to this, is that stickiness, once you've gotten integrated, is very high. Yeah. And cost of switching becomes higher.
Stickiness. Yeah.
And remember, Amazon is a massive investor in Anthropic, and AWS is still the market leader, from my understanding, in cloud. And so if you are a business or an enterprise building on AWS, there's a high probability that Claude will be or Anthropic software will be somewhat integrated to that, which creates a massive opportunity for them too. And it's very sticky. So I'm not as concerned about the moats at this very moment, but I do think that we've seen in the past that stickiness can be the sort of thing that keeps people.
This is a very good point. And I'd also offer too, like in the context of large language models, there's also like the memory around that, which, which is not kind of quite the same as the stickiness for the cloud provider. It's like a new thing that's specific to probably AI. But like if you're a business and you're using Anthropic or any of these platforms, right, and you're generating that, the AI has that memory, your instance of the AI has that memory around your business, that's going to be tough to like pull yourself away from that and go somewhere else if you can't take it with you, right?
Yeah, that's a great point too, because that's like with me with OpenAI, I've done so many projects with it on the pro version. I mean, it's got everything in there.
It like knows you, man. It knows you.
I have the inverse problem actually, though. I feel like, because I've used it for so many document revisions, like, large contracts and policies where I've dropped it into ChatGPT and it uses its memory and it remembers errors, like things I changed. Like I can't unlearn it. I'm like, oh, don't remember that. I actually changed that policy. Like, and it's like, oh, like you said this thing, and I'm like, no, you need to forget that. I don't know how to like update it with like the right context.
Yes, that's a
funny.
good point. You should write the OpenAI team. Maybe they could find a solution for you for that.
Yeah, maybe.
All right, fellas, let's move on. All right, so xAI. So xAI did this really interesting deal with Valor, which is one of their venture capital fund investors, right? So Valor is going to go out and buy $12 billion of GPUs. Okay, my estimate is that's 350,000 GPUs. It's a lot, right? I mean, $12 billion is a lot of money, full stop, right? And then they're going to lease these GPUs back to xAI. I can only imagine there's some covenant, like there's something going on here where like this isn't happening through xAI's like legal entity structure. Like maybe I know
course.
they just
It's
did
an
a debt.
SPV. It reminds me of Enron.
Well, like
say, it sounds a little fishy to me.
I just like I wonder they just did a debt raise. I wonder if there's like covenants in that debt, that bond, that like note that they did if they can't do more or something. So this is like a creative way to like kind of circumvent that, I suppose.
Yeah. I put the same notes down when you said, hey, we want to talk about this Valor debt facility. I actually didn't spark anything fishy on me. It was just, you know what, these are going to be loans that have a number of covenants on them that will just guarantee those guys are going to come out decently well. If now, Valor wants to benefit from earlier investments and exposure they already have to the company on the equity side, they want to promote growth, and maybe they don't want to add on additional equity or additional risk, that same degree of risk, they can come in with this and kind of guarantee, or as close to guarantee, their payback while helping the company at the same time. So I don't smell anything fishy. I just bet that they're going to be benefiting immensely from what people aren't seeing written all across those debt facilities. So I think it's a good play for Valor for sure.
Valor's like, dude, those guys are ride or die with Musk. Like Antonio Gracias and Musk have, I think, been friends forever. And in fact, Gracias even helped out with Doge. He was doing like Social Security stuff. So hats off to him. Thanks for the time and effort. I mean, those guys are like joined at the hip, which is awesome, I think, for the Valor folks. And
right.
I like for everything that I hear about Valor, they're like very smart people over there, right? So I'm sure this is a very good deal for both investors, xAI and Valor, I would have to imagine, right? But maybe the other thing that caught me by surprise on this, okay, so Musk put out a tweet. So Musk wants to get to 1 million GPUs, which I thought was like an astronomically high number, considering like what's going on out there. Like I think Grok 4 was trained on like 100,000, 150,000. I tried to find like the exact number through some research. I couldn't put my finger on it. But Grok 4 is like I think a very good model. I use that a lot, right? And it tested very well with a lot of the benchmark scores. So I can only imagine what a model that's trained on 1 million GPUs is going to look like, right? So there's that. But there's a couple things as I was putting together notes on this. So one, it looks like they already have 230,000 GPUs operational. Musk said another 550,000 are going to go online in a few weeks' time. So that's 780,000. I don't know if in that 550 it must include this 350,000 coming from Valor. It must, right? I would have to think. But anyway, that's 780,000. So they're getting close to the million, right? But since I also love Grok, GROQ, the semiconductor company, Musk also noted in that same tweet that inference is happening through their cloud providers. So these million GPUs are used only for training, and inference is happening through rented chips from other parties, whether they're GPUs or Grok inference or whatever it is. Like very interesting. I don't think a lot of people. I didn't fully appreciate that, right? So I'll stop talking. So maybe Evan, we'll go back around the horn this way. Like, what do you think of 1 million GPUs, like Grok 4, being trained on, I think, something less than 200,000. Is that going to make a difference? It looks like it is. Like, What are your thoughts on just this Valor deal and how they're structuring it? Let it
Oh
rip.
my God. So many different things. All right. So
Yeah.
I'm going to work backwards on this. So 1 million GPUs. Well, one, I understand that the latest model of Grok was trained on a couple 100,000 GPUs, and it demonstrated that the amount of GPUs does have some sort of impact on the quality of the output.
Mhm.
It's theoretical, of course, whether or not that scaling law actually applies, or if there is like a S curve where at some point it
Right.
sort of peaks out.
Plateaus. Yeah.
So there's some big risk there, specifically on the financial side. 1 million GPUs, I still wonder if they have the electricity output capable of running it. I mean, I believe this is somewhere in Tennessee, if I'm correct.
Yeah,
right?
Memphis. They're doing
Yeah.
some natty gas. They're using some natty gas generators now.
It's just like you need a lot of energy to run that. Now, if they're not doing the inference, it's really all for model training. I mean, it's quite interesting. And I'm glad that someone's taking this massively big bet on seeing if it works, because if it does, it could be pretty exciting. So now taking it all the way back to the Valor deal, to me, I think it's interesting. I think it's, Valor, they're quite smart. I feel it's like conflicts of interest. Like how much, like, hey, like why not just give the company more equity so they could buy the GPUs outright? Like, why are you purchasing them and leasing them directly to your company? Are you a director of both businesses? Like, what's the benefit here? I feel like there's some element here, and maybe this is conspiracy Evan putting his hat on for a second, which is that, taking those, if, Valor buys those GPUs, they take them out of the market. They can't go to a competitor, right? So while one way you're giving your portfolio company access at a great price, at a great value, and a great economic deal for both parties, you're also taking a bunch of GPUs away from OpenAI, and Gemini and all the other ones. So there's just some world where, like, I think they're playing for keeps here, right?
For sure. There's got to be some logical reason on why they structured it this way. That's like, non-public information.
Yeah.
Right.
So
whether
I think
NVIDIA couldn't sell that much to one party at one time, or there was some covenant in the note. There's had to be something that's like not obvious that allowed this structure to happen. I think. I don't know. What do you think, Nick?
Yeah, I love that last thought. It's not like you can't use those GPUs somewhere else. Any of the portcos, any other Musk company, any other anything. Everybody's vying for them, and so much of that is already pre-bought. So I'm not going to say it's riskless, because the cost for each could go down in the future, but I don't know that that's necessarily the case. So I really like that as a compliment to the bet. It's reducing the risk of the bet in any case. It's perfect. Yeah.
I mean, it kind of mirrors what's happening with OpenAI, right? They had like, a separate company effectively with SoftBank that's buying chips, and they're standing up data centers. I mean, it's very similar.
Isn't it what,
right?
Isn't it what all of these, like, OpenAI signs a deal with Microsoft and they get Azure credits, right? Like Anthropic signs a deal with Amazon and they get AWS credits. It's like, we've seen this sort of round tripping of dollars before. It's just
NVIDIA,
another version
NVIDIA
of that.
And CoreWeave.
NVIDIA and CoreWeave, exactly.
There you go.
We've seen it before.
Yeah, that's interesting. All right, Clint, any thoughts on the deal?
No, not. I think everybody's on the same page here. I think this is creative financing. I think it makes sense for the company leasing out the GPUs, because we've seen there's collateral value there in terms of lending with the CoreWeave example. So there's access to liquidity from having the GPUs, and from a resource allocation perspective, from xAI's point of view, get you to your goal faster, probably, right? Without having to eat up your entire operating budget on owning the GPUs, right? Especially since it's a depreciating asset, or at least it should be in theory. And so it provides, it provides flexibility down the road. What if there is, a major revolution in compute, right? We have these from time to time, and we have a leap forward, and you're holding a bunch of these GPUs, right? You're able to pass that risk off. So I'm with Evan, though. The power is my biggest question. To do 1 million GPUs, you need a gigawatt, roughly, right? That's probably the high side of the estimate. It's about 0.7 or 700 kilowatts to a gigawatt. A gigawatt's a Dallas. It's Dallas, Texas.
Jesus.
So you need a Dallas, Texas to run on the grid to run that. Think about what you're talking about. You're talking about a lot of people. It's a lot of electricity usage. And I still think that's the gold mine here, is betting on that infrastructure bill out. and electricity demand going through the roof. Electricity is already up, just from a price perspective, up 35% year over year. You want to find inflation, that's where you find it. And I think there's significant opportunity in that space.
Is there notice though for Memphis providing more energy than that capacity? Like, how are they going to do it?
Well, no, they're
Yeah,
doing
why are we
natty
going
gas
somewhere
Doing
generators.
nat gas.
Nat gas?
They're doing natty gas generators, and then they've got Tesla batteries, like industrial batteries in there. They're storing it.
If we want natural gas, we can also go further north. Maybe it's more expensive to Pennsylvania.
Or you go to Texas, like in the Fermi deal that they're doing, that 11 gigawatt center with Texas Tech.
Well, listen, did you see this thing that Trump did? This executive order that Trump signed last week, this AI, I'm going to butcher I can't remember the formal name of it, but the AI plan, right? I mean, they basically said like green light on everything. Yep, I listened to his speech,
it's
and I was like,
it's like the Manhattan Project. Is what everybody's
it was like,
calling.
yes, whatever you need.
It's a national security issue. Got to win it.
Yeah, so like, I mean, and like Lee Zeldin's the head of the EPA, which I think a lot of this like electricity production stuff kind of follows, you know, some of it falls under him, or at least the speed of which the stuff can get stood up front falls under him. And Trump was like, you got a week to approve stuff. I mean, it's like, they're just saying yes. It's like, go. Like, what do you need? Natty gas generators? Go ahead. What else? Just let it rip, fellas. Like, let it rip. You know, it's like, I mean, I don't think that's going to be a blocker anymore. Well, I think the time to set up the production of it, obviously.
Yeah, deregulation is going to help. But I mean, if you listen to Eric Schmidt, what he said is we're going to need 90 gigawatts.
Right.
90. So we're talking about a nuclear plant is 1 gigawatt top end. So you're talking about 90 of those, 90 Dallases, 90 nuclear plants.
Yeah.
Like, and that's most likely a conservative estimate if there's not a major leap in the energy efficiency of these GPUs and the compute needed to scale. So
guys, just think about how all this like plays out. That's why I kind of get excited about this as an investor, because like if the electricity use estimates play out, right, then that means that the GPU and the data center estimates play out, which means the use of AI and the implementation of AI and these models play out like in the economy. Like the productivity gains in the economy are going to be through the roof.
Here comes
all
the
of this
boom.
plays out.
Think about what it means just economically, just the amount of cap. Because where are we going to get the money? And it's not complicated, but where are you going to get the money for 90 gigawatts for that amount of infrastructure for Apollo's conservative estimate of $2 trillion? Where are you going to get it?
Yeah.
You're going to get it by printing it.
Yeah.
This is unbelievable.
We're gonna print it, but then to your point, Clint, like all the time, like I mean, massive deflation from all of the product, you know what I mean, from all this unleash of automation and productivity, right? It's gonna be so interesting. I'm like this next like 10 to 20 years. I like had a back and forth with my wife today on education with our kids and like how they use AI. This is the new thing now. I got a feeling that's going to come out with kids is like how much AI and large language models they should use. Like, should they use it or should they not use it?
Well, you've seen these reports come out and say like you're harming yourself if you're using AI, become dependent on AI. Like it's messing with your ability to learn and process.
My take, that's like fighting the ocean.
Oh, yeah, I'm just like, why don't you just think about other things like benefit? Like I think it's gonna raise awareness and impact humanity positively, but that's just the way I view it.
You gotta just, I don't know.
Yeah, another way to look at the calculator. Yeah.
Right.
That's how you're able to do Calc 2 now. A whole lot easier rather than doing every smaller piece of the equation. No, you're golden.
Yeah, it's going to be hard. It will be. I do think it's more. I do think it's going to be hard for kids. Yeah. I do think it's going to be hard for kids though, because there's going to be a lot of change in a very short period of time. So like them understanding like what, like kind of when I was growing up, there was just like a way to do things and you just did it that way. It was like laid out for you, right? And you did it that way.
Kids are so much more adaptable than we are though as adults. We're the ones that get fixated, right? The kids are adaptable.
Yeah, but
there's certain age
but Clint, like if the parents don't even know which way to point you, that's like, there's like a generally accepted path when I was a kid, and I think through the 90s and the 2000s and even the teens. And like now there's no like, I think, clear path. I mean, there's a lot of smart people who are saying we're going like this way, like I'm taking a right turn, and like, so there's going to be this, like, there's going to be no social norm now, I think, for kids. There's going to be like people splintering off and heading in all different kind of directions, which is going to be kind of wild to see what happens.
Beautiful chaos.
Yeah, man. Creative destruction, baby. All right, so Figma IPO. Okay, it's coming in. It looks like it's going to be $15 to $16 billion valuation. It's going to start trading on Thursday. Okay, and this is down. So Adobe tried to buy Figma in 2022 for $20 billion. Okay, the ARR number I could find for them right now is around $1 billion. So this is going to be like a 15x revenue, type business. But again, it's down from what the Adobe deal was supposed to get done at. So you can thank the regulators in Europe for killing that Adobe deal for Figma. I feel bad for those guys. But what are your thoughts? I think we talked about Figma a couple of weeks ago. I think everyone was generally like positive on their business. Any thoughts on this valuation now that it's getting locked in and the prospects for the business once it's in the public markets? Right, Clint, maybe we'll start with you, man. What do you think?
I mean, for clarity, they never had a round at that valuation, right? So it's not technically a down round. This was just a valuation from an acquisition, and that was the headline number. We have no idea what the structure of that or at least I don't. I'm not familiar. Maybe you guys are with the structure of that acquisition and all the inner workings of it, but headline number is very rarely the number. So I think this is, to be able to be rumored to go public at around a 15x multiple of revenue. Got a great business model. The market seemed to be open in terms of these IPOs. I'm looking forward to it, and it's nice to see that coming back on being a source of liquidity again. So that's kind of my view. I do think you have to be a strong business to go public in this environment, and I think Figma's got the right ingredients for it. So I'm not really hung up on the quote unquote down move from that $20 billion valuation, as some people might be. It doesn't look good, but I think that was a special circumstance. I think the business is solid. I think 15x is rich for a company that's that mature.
Right. Nick, do you like the company?
I do. Yeah, we talked about Figma maybe a month or two ago.
Yeah.
I think it's largely sticky, and it's interesting. I ran some historical revenue figures on it. From 2021 to 2022, they had in excess of 100% growth. So in 2022, when they're getting that 20 billion valuation, I mean, that was brilliant. The year after, things fell apart because I think so much was dedicated to it, and they were at 20% growth, and now they're back up almost at 50. So those numbers were really volatile, all while Canva's year-on-year growth has been shrinking from 67 to 56 to 30 to 20, and Adobe's pretty steady state at 11, right? So I think that it's very reflective of that 20 actually being a pretty decent price, but not standing up because the market moves. There's volatility here. So yeah, Nick, I think
PM Insights. I was looking at it today. Correct me if I'm wrong, if I'm not remembering this correctly, but it was trading up in the secondary, right? And then it came back down recently. Am I remembering this correctly?
I have not opened it today.
All right, hold on. Let's go to Evan. I'll get Evan started. I'll give you a beat so you can check it out. So Evan, what do you, I know you like Figma because I remember you talking about it, and you're like, everyone loves this. The moat's great. Like, people are locked in, right? I think if I remember correctly, we even had like a discussion about if AI could disrupt the business, right? And I think your thoughts were like, I think people love this stuff. Like, teams that use Figma really like it, and AI is not going to disrupt the business. If anything, it adds stickiness to it, right?
I mean,
is that right? I remember that correctly?
I mean, I love the business. I think it is quite sticky. I can't think of a premier technology company that doesn't use it, and all the best designers, from my understanding, use it.
Yeah,
it's built a great product. AI certainly is a risk, but there's probably more opportunity for them to embed AI into the product and make it better than for them to get disrupted entirely out of it. But that remains to be seen. And just to Nick's point on the growth, it's like, just remember who their customer segment is: the startup segment and the technology segment. And 22, 23, we saw a ton of down. Like, everyone was cost cutting. It was the years of efficiency. So the first thing you're going to cut is all the excess seats, all the layoffs, all the people that come through that. So that's going to impact their markets. But then things come back up again, and you hire more people, and they get more Figma access.
Right.
I think there's a lot of opportunity here. So I'm quite excited. Now, just related to the IPO price, I think on this podcast, I've never gotten it right. Every single time I've thought an IPO, I've like said the other way. I've gotten it wrong every single time.
Would be a hedge fund manager,
all the way
man.
from Reddit all the way through.
Well,
So,
all of us were pretty bearish on how successful Reddit could possibly be. I remember that. I was like, oh, geez,
yeah,
this
yeah.
thing's just ripped.
CoreWeave,
Yeah,
Reddit all the way
yeah,
through. I've just never get it right. So I'm just gonna hold off and say I'm not gonna put my opinion on record here because I don't need more losing.
Yeah.
I'm not the Chicago Bears.
No, Evan, you just say, I like building diversified portfolios, right? I like to build the diversified portfolios, right?
I like tax loss harvesting. Like that. That's what I like. I like tax loss harvesting.
That'll do it, right? Just stick with that, man. All right. So Nick, any kind of interesting insights on from the PM Insights data?
Thank you for buying me a minute on that. So yeah, I think we started to get a little bit of news trickle through about the IPO a couple months ago, and that, you're right, was the peak. It almost hit 18 billion, and probably because the line in the sand was around your 20, and people knew it shouldn't be achieving that. And now you're hovering around like a shoulder, I would say, at 14. So the valuation set at 15, 16 doesn't
Ballpark,
seem
right?
that nuts, especially because so many of the recent IPOs have done super well. So
right.
it's priced in that the IPO price should be higher than the secondary market price in the privates, and then it's priced high enough so that it doesn't look odd for that IPO rate. And also there's room to run if the thing does go back to 20 and people have that point in their memory, and the revenue's still up above that by a fair bit. So yeah, I could say this will be a very smooth IPO and hopefully just act the way the folks at Figma want it to, and the bankers as well, without looking too ridiculous and having 100% gain in the next month. So
right.
Yeah,
love it. I love it. All right, fellas, let's end it there. This was a great session. I had literally there was 4 or 5 other great topics to talk about today, but
it's a lot on.
These hit the mark. Maybe we can circle back to some of those other ones next week, right? But have a good week, Mark. All right, fellas, I'll talk to you guys next week.
You too.
Thanks,
Okay,
everybody.
Cheers, guys.
Thanks, boys.
Cheers.